interesting time in the markets. We've seen a lot thrown at the markets, whether it's the sell-off we had, volatility, concerns about QE ending, Ebola, we could go on. But earnings look pretty good. GDP looks pretty good. So is there enough good news really to propel the markets higher from these levels, not just now, but into 2015?
I think so, Rhonda. I think it's going to be choppy, but I think the trend is up. So as you pointed out, we just went through this correction. You know, it's really not unusual, although people panic when it happens.
I haven't seen one in so long.
Yeah, 10% correction. So what else is new in a bull market? You know, we've seen that before. And it was due to macro factors, as you mentioned, as opposed to the fundamentals of the U.S. improving data. As you know, GDP was just reported for third quarter, up 3.5%, you know, after a very strong second quarter, which rebounded from that suppressed first quarter. And we see, you know, consumer confidence at a 7-year high. Earnings are beating by about an average of 4% for the third quarter, and I think they'll come in with an increase of about 8%, which is very positive in a global environment that's seeing a slowdown. So earnings, I think, are the driver. Earnings are headed higher, and I think one has to be very selective. I think it's going to be choppy because of the end of QE and the beginning of normalization of monetary policy. But I think, and so that will tend to make markets skittish and choppy, but I think the trend is up.